All right, so today let's talk about high probability setups. What do we look for when it comes to trading supply and demand zones? First of all, do you even know what that term means? We're talking about aggressive areas in the market where we have loads of selling or lots of buying taking place. So the number one thing that all traders need to really understand is market structure, understanding which way is the market moving. Are we making higher highs and higher lows, or are we moving to the downside and doing the opposite of making lower lows and lower highs? Now, to anyone out there who's interested in making money, each and every day, whether it's 2 days a week, 5 days a week, whatever it may be, okay, I'm going to show you a simple strategy and how you can do so. Really, all you need is about 1 hour of your own personal time to be able to do so. And you can turn this into either a part-time or a full-time job, okay? Now, you don't have to do it every single day if you have, let's say, you got a 9-to-5 job or a job that you love to work day in and day out. All right, this is something where you can actually make some side money, all right, as a side hustle. And, I'll put away for maybe a vacation, okay? Pay some extra bills with, pay your credit cards off with, whatever it may be. I'm going to show you a simple way of going about stacking some money to the side or making some money so that you can live comfortably and possibly even take some and start investing to other things. Maybe it's ETFs, or maybe you have some stocks that you're interested in trading or putting money in for long-term purposes, or maybe funding more money possibly into your 401k, okay, at work. So let me show you this right quick. But again, you have to understand market structure because it is the essential key to it all. All you need to do, I'm going to show you, this is the ES. And it doesn't matter what instrument or contract that you actually are interested in trading. It really all boils down to what can you see happening. You ever heard the term or the saying, trade what you see? That cannot be the furthest from the truth because it is absolutely the truth. Trade what you see going on the market, on the charts, okay? So I'm just taking this one chart, okay, the ES, or this one market, but I'm using basically two charts. I'm using multi-chart influence. The first chart I'm using is my 60 range chart and my 12 range chart for my entry point. That's if I'm trading the ES. I'm trading the NASDAQ. Guys, I have tons of videos on the channel where I post entries and showing trades and posting entries over on our Discord community of trades I've taken. But I'm trading the 120 range and the 24 range for my entry chart on that particular market. But today I want to show you just a quick trade that I took on the ES futures. All right, it was a short entry. And, if you are trying to trade against the grain with these markets today, right now, the markets have been dumping. I mean, we had some nice pullbacks, but they've been swinging to the downside. So if you go back and look, and squeeze things together, I mean, what you can see is that the market has really been pushing to the downside since about middle part of February. We've really been selling off to the downside, okay? This was probably our last little push. Let me see here. Yeah, a little push to the upside right here. Right here, basically back in, let's take a look here, further back. Back in really latter part of November, towards the beginning of December. Then we got a push down, pull back, and made a lower high right here. And since then, in February, it's been massively selling off to the downside. No jokes, okay? So let me show you how this works, all right? All we need to do is determine the direction of the overall market. Number one, write the steps down. Figure out which way is the market actually trending or moving. As long as you see it making lows, lower highs, lows, lower highs, lows, lower highs, lows, lower highs, you should be able to see this stuff with your own eyes. If it is moving to the downside, okay, and you have aggressive pushes where the market is breaking through levels or through areas of structure, then you want to be trading going short only and looking for key areas of supply to trade from. So if I see these moves like this where the market is making, lower lows and lower highs, and then we get a pullback right here, right? Okay, yes, we are starting to make higher highs and higher lows back to the upside, taking out some areas of structure. But you got to overall, wait patiently and let the market do its thing and really identify or let you know which way it's really going to move. So if this is the most recent low that it came off of before it started turning its direction back to the upside, and we start taking out like structure back, going to the upside, like here, where we get that kind of that reversal. So we make a high, higher lows, highs, higher lows, breaking structure above these areas, pushing up, breaking more structure. Yeah, we can look for pullbacks to key areas of demand to, take it going long, but we got to be mindful that this is a major low now. And then once it starts taking out or breaking areas of structure above us, then we have, like say for example, this would be a major high right here. We're in between a leg. So we have a major low, major high. And then again, the market can turn right back around. My eye is going to be focused on this area right here, you know, when we start coming back down, because we might start taking some of these areas of these minor swings out. Minor swings right here in between this leg. And if we do, then we can shift to start going back short again, okay? Because I mean, literally the market's been making these big swings to the downside, but that doesn't mean that we can't turn back around, right? And start taking out areas to where it starts pumping back to the upside and look for, you know, nice pullbacks to areas of demand. But in this case here, yeah, making higher highs and higher lows after we got basically a channel to the downside right here. And then we take out some areas, but quickly turn back around and make lower highs, pushing lower, taking out structure here. Yeah, you can look for a pullback to a key area of supply to go short. And then again, keep your eye on this major low right here, because it breaks this area right here. So you have a breakdown of what it's going to look like. This pullback, then breaking lower, then you got a nice break of structure below a major high. Then just look for a pullback to a key area of supply to go short from, right? So this morning when I was taking looking at the market and I glanced over at the ES, and mostly I've been trading the NASDAQ lately, but I had the ES up on another chart. So I saw it coming to the downside right here, making lows, lower highs, lows, right? Breaking below structure right here, okay? So we got a swing down, pullback, breaking lower, okay? And it came down and broke below that area here. And so we got to push, pull back, breaking lower. Nice little swing right here. So this left an area of supply right here. Supply is aggressive selling. Now, one thing I like to look for is to see if there's an imbalance or gap resting back at the zone or inside the zone. There's one right here. So the market comes back to that actual zone right there. When it does that, I'm going to mark up my higher base chart, my 60 range chart first. All right. So again, we're first identify structure. Secondly, or to determine which way you're going to actually trade. Secondly, identify, you know, which way. Once you determine you're going to trade, you know, say for example, okay, we're coming to the downside breaking structure. We have a major low, we got a major high here, but we're coming back lower. Then if I'm interested, I'm going to mark up a supply zone. So mark your zone up off your higher base chart first, as long as it's a high probability setup. Do that. Then we're going to go down to basically the third step is looking at your lower base chart to find an entry point, meaning a nice supply zone inside this larger supply zone. So it's a zone within a zone approach. So we have the 120, excuse me, not 120, this is the ES, the 60 range supply zone marked up. Now we'll move down to our, if I said 24, guys, I'm sorry about that, 12 range, because we're trading 60 and 12. 60 on the higher base and 12 on the lower base chart, the entry chart on the ES, okay? So we go down to our 12 range chart and we mark up our 12 range supply zone that's resting on the inside of this larger zone. So let me make sure I have this marked up for all charts. Yes. Now let's move down right quick. So here we are right here, which is this low right here, okay? Right here. So we start to pull back, retrace back to the zone. Larger base is our 60 range zone. The smaller one is our 12 range zone. That's a 12 range supply zone right there. That's resting on the inside of the 60 range supply zone, okay? The larger chart supply zone. Once it taps into the first zone and then taps the second zone, all we're doing is looking for a break and close of a candle. Basically, the break of the candle kind of approach, meaning whatever the last bullish candle was that tapped inside the zone, say the 12 range zone in this case here. There's two ways you can do it. You can go in aggressive here at 708, 5708, or you can go in more conservative here at 5705. It does pull back before it makes its push or push to the downside. Your stop's going to go back at the entry point from where the rejection took place at. So the rejection took place here at 5711. Give yourself maybe 2 or 3 points breathing room in case they want to come back, push down and then come back, maybe wick this area out and stop these sellers out. They love to do that. But this case here, they pushed down, came back, didn't stop above there. They came right back to, the midpoint of this other rejection point here, and then they pushed lower. So we look at the higher base chart, and you can see the market is breaking structure lower, right? So we got a break of structure right here. So more than likely it's going to come down here and take out this low and possibly run this low here. Now, it's not guaranteed it's going to take that major low out, but just be mindful that they possibly can. But again, the more likely they're going to take out or wick at the bottom end here, 56.79, and then maybe take out the major low right here. But either way, that's what I do each and every day, and that's how I make money or make a living from trading, these supply and demand zones or these setups that I see within the market, 4 and 5 days a week. Sometimes I'll just trade 4 days a week, and have a 3-day weekend, So you can do this to make, again, some part-time good money if you really know what you're doing. And then as you can see, shortly after that, that was the trade right there. It came back down, created another supply zone right here. And then it came down. When it came down, it broke this major low right here, which was another indication to look for a solid setup on a pullback to go short. And from there, honestly, if you held and got to this trade, or even got to this trade right here, I mean, the market just dumped to the downside. Could you imagine getting in this trade, even on the second supply setup right here, maybe somewhere around 56, 82, 83, maybe 81, and holding it to where it's at right now? You're talking about 50. That's like 80 points right there. A little bit more than 80 points you could have picked up on the ES. Try trading out with one contract. Again, that's kind of like, holding a position pretty much during the whole session. I don't really do that. On the ES, I mean, if you could get 10 points on the ES or even 5 points, depending on the number of contracts you're actually trading, you can do very, 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 very well. You can pick up $500 very quick on the ES just trading one contract. 2 contracts, all you need is a very small move on the ES, and you can be up $500 on the day. I mean, I think it's like 5 points on the ES on 2 contracts. I believe put you at $500 pretty quickly on the ES. So I just want to share that with you guys in reference to supply and demand zones. Again, you want to focus in on the high probability setups, the trading in the direction of the higher base chart. Please do not try to trade against the grain. Meaning, if we are bearish to the downside, look for supply setups. If we are bullish to the upside, then look for demand setups falling in the direction of the higher base chart. Okay, in this case here, the 60 range. That's all I want to do is share this with you guys today. I appreciate each and every one of you that tune in and watch the videos. As always, anyone who is interested in the trade breakdowns, the video playlist, and the great video that I covered surrounding market structure, you may want to become an elite channel supporter. The link is down in the description portion of the video, right below the Discord link. The Discord's free. The second link says elite channel supporter. If you click that link, it's only $6.99 a month. That's it. How many of you actually spend more than that on the price of a cup of coffee a day? And that adds up weekly to what? 50, 60 bucks, whatever the case is. Here's something that could be game changing for you if you just simply spend the time watching the video content, taking good notes, going back testing the strategy itself. Again, because I can't guarantee anything because the strategy works. Trust me when I say that. Okay, we have people that trade each and every day that are part of the Discord community. All right, so only $6.99. There it is. I mean, you can give it a try. If it doesn't work, then move on. Then I'm just telling you that it works. You just have to back test it for yourself. You have to understand. The biggest thing is market structure. Which way do you need to be taking your trades based on what's going on the higher base chart and looking for these quality setups. Okay, zone within a zone confluence, because that's what it's all about, is confluence. But that's all I have, guys. I appreciate it. Again, the link is down in the description portion of the video. If you're not a current subscriber, please take the time to sub by subscribing to the channel. Make sure to turn your post notifications on by clicking that bell. And last but not least, drop a like, click that thumbs up button if you found some value in today's video and I showed you something that could, that you kind of maybe interested in. You're going to look into it further, more. Maybe you're already, a subscriber here in the channel and said, yep, it works. I know how it works. Or if this video just simply kind of enticed you in any way or gained your interest, make sure to click that like button for me. I appreciate it. Take care, and I'll see you in the next one.